Welcome back. The cash equity market went dark at 4 p.m. Eastern on Friday, May 22nd. The bond market shut down at 2 p.m. under SIFMA guidelines. For 72 hours, the only price discovery happened in futures, FX, and crypto. In that window, the following occurred. President Trump announced a deal with Iran was largely negotiated. Iran sent a delegation to Qatar. Pakistan's army chief told China an agreement was close. Then, while markets were closed Monday for Memorial Day, U.S. naval forces sank 2 IRGC boats laying mines in the Strait of Hormuz, and Iran fired surface-to-air missiles at U.S. warplanes. The U.S. struck a missile launch site near Bandar Abbas. And despite all of that, despite active kinetic exchanges over a holiday weekend, futures are up. S&P 500 futures are indicating a 7,545 open, up 0.67%. Nasdaq 100 futures are up over 1%. The 10-year yield has dropped 7 basis points to 4.50%. Oil is rebounding about 3% this morning, but it is still down over 13% from last Thursday's close. The market has absorbed 72 hours of diplomatic whiplash and military escalation and is pointing higher. The question is not whether the deal is real. The question is what the market is pricing in that the headlines are not. I'm Daniel Reed. This is Market Lens. Let's get into the data. Let's establish the timeline precisely. Friday, May 22. Markets closed mixed, but the Dow printed a new all-time high at 50,579, its first record since the war began in February. WTI crude crashed 13.94% to $96.60 on a single Reuters report that Qatar had sent a negotiating team to Tehran. The University of Michigan Consumer Sentiment Index was revised down to a record low of 44.8. Inflation expectations for the next year were revised up to 4.8%. Saturday, May 23, 4:52 p.m. Eastern. Trump publishes on Truth Social. An agreement has been largely negotiated, subject to finalization, between the United States of America, the Islamic Republic of Iran, and the various other countries. The Strait of Hormuz would be reopened. Far's news in Iran immediately pushes back, calling Trump's assertion inconsistent with reality. Sunday, May 24. Negotiations continue. An Iranian delegation led by Parliament Speaker Mohammad Bagher Khalibaf travels to Qatar. The Associated Press reports both sides are closing in on a framework that would end the war, reopen the strait in phases, and have Iran give up its stockpile of near-weapons-grade enriched uranium, 440.9 kilograms at 60% purity. Monday, May 25th, Memorial Day. U.S. cash markets closed. But U.S. Central Command announces that naval forces sank 2 Iranian Revolutionary Guard boats that were actively laying mines in the Strait of Hormuz. Iran responds by firing surface-to-air missiles at U.S. aircraft. The U.S. then strikes an Iranian missile launch site near Bandar Abbas. It is the most significant kinetic exchange since the ceasefire was extended in April. Yet Trump posts again Monday. Negotiations with the Islamic Republic of Iran are proceeding nicely. Rubio says a deal could take a few days. The futures market, which never closed, prices the probability of peace at higher than the probability of escalation. That is the central tension of this open. The military and diplomatic tracks are diverging. Now let's look at what the pre-market is actually telling us, because the headline numbers hide important divergences. S&P 500 futures at 7,545. That is roughly 50 points above Friday's cash close of 7,493. The S&P is now grinding toward the round number resistance of 7,550, which has been the ceiling for the past week. The Nasdaq 100 is outperforming, up over 1%. Chip stocks are leading. Micron and Marvell both up over 5% in pre-market. Qualcomm surged 11% on Friday after a Wells Fargo upgrade on Dell, which jumped 16%. The AI semiconductor trade is reasserting itself as the dominant narrative. Magnificent 7 stocks are all green pre-market. Nvidia is up over 1%, Tesla up 1%. The bond market is telling an equally important story. The 10-year yield drops 7 basis points to 4.50% in its first trading session since Wednesday. That is a meaningful move. It tells you institutional money is buying duration, betting that the Iran peace deal, if it materializes, will reduce the energy-driven inflation premium that has been pushing yields higher all year. Oil is the complicating factor. Brent crude is rebounding about 3% this morning to $97.80 after the overnight strikes. But context matters. Brent was at $108 a week ago. It is still down over 10% from last week's highs. The market is interpreting the overnight escalation as a negotiable incident, not a deal breaker. The VIX is at 16.59, down from last week's levels but not collapsing. It reflects a market that is optimistic but not complacent. The sector rotation is clear. Tech and semis leading, energy lagging, consumer discretionary gaining. This is the textbook peace premium trade. Let's be precise about what is actually in this emerging deal based on confirmed reporting from AP, Reuters, and regional officials. Three-stage framework confirmed. Stage 1, a formal declaration ending hostilities on all fronts, including Lebanon, where Hezbollah and Israel remain engaged. Stage 2, phased reopening of the Strait of Hormuz, in parallel with the U.S. ending its blockade of Iranian ports. The U.S. would also grant sanctions waivers, allowing Iran to sell oil. This is the economic core of the deal. Iran's economy is in freefall, with inflation above 70% and the rial in collapse. Stage 3, a 60-day negotiation window for the hardest issues. Iran would give up its stockpile of 440.9 kilograms of uranium, enriched to 60%. Some would be diluted, the rest transferred to a third country. Russia has offered to take it. Sanctions relief and the release of frozen assets would be negotiated. What is not in the deal? Iran's missile program. The nuclear enrichment question beyond the current stockpile. U.S. troop presence in the region. Reparations. These are deferred. Iran's foreign ministry spokesman Baghai explicitly stated, "To say that this means an agreement is on the verge of being signed is not something anyone can claim." The market is pricing this as a 60 to 70% probability of a framework handshake within days. That is a reasonable base case. But the 30% tail, where negotiations collapse over snap inspections or enrichment rights, is not reflected in the VIX at 16.59. This is a holiday-shortened week, which means compressed positioning and amplified reactions. Here is what you need to watch. 1. PCE inflation on Friday. The core PCE price index is expected to print at 3.3% year-over-year, the fastest since late 2023. If it comes in hotter, it will reinforce Fed Governor Waller's comments from Friday that the next rate move is just as likely to be a hike as a cut. That would cap the rally regardless of the Iran deal. 2. The Strait of Hormuz status. Watch WTI this week. If it holds below $100, the peace trade is intact. Any close above $105 signals the market believes the ceasefire has collapsed. 3. Fed speakers. Jefferson, Cook, Williams, and Musalem are all on the calendar this week. Watch for any confirmation of Waller's hawkish pivot. The market is pricing a 98% chance of no change in June. A hawkish Fed speaker could shift those odds. 4. Zscaler and Salesforce earnings tonight. These are the first major tech prints post-Memorial Day. They will set the tone for the rest of the week. The market has chosen its narrative. Peace is more likely than escalation. The pre-market is betting on a world where the strait reopens, oil settles into the $90 to $100 range, and the Fed holds rates steady. But the overnight military strikes are a reminder that this is not a done deal. The gap has closed, but the uncertainty has not. Keep your data sharp and your logic sharper. I'm Daniel Reed. This has been Market Lens.